Hello. On behalf of Polar Capital, the board and the healthcare team, we'd like to thank you for your interest in the Polar Capital Global Healthcare Trust, otherwise known as PCGH. Gareth and I, who co-manage the fund together, would like to talk you through a presentation that reflects on the financial year 2024, but more importantly touches on why we're so excited about the outlook for 2025 and beyond. After a challenging period on a relative basis, we believe the healthcare sector is poised to recover for a number of reasons. The healthcare industry is highly innovative, and we're seeing the adoption of cutting-edge technologies and the development of products and services to address unmet medical needs. We see multiple sources of durable long-term growth, with emerging markets particularly compelling in the near term. We're starting to see the development of artificial intelligence and machine learning solutions to help drive efficiencies and better outcomes. And perhaps most importantly of all, we're really focused on access and affordability, which we believe is critical for sustainable commercial success. In terms of the opportunity, the sector's heavily out of favour after 2 years of relative underperformance. And we're seeing some short-term volatility created by the US political situation, but we feel that's creating a medium-term investment opportunity. Most importantly, despite the large cap bias of PCGH, we do see investment opportunities across the entire market cap spectrum. And we're starting to see new product cycles that we think are capable of driving revenue and earnings momentum in the near and the medium term. In terms of the trust itself, it's an investment trust led by a specialist team. It does have a large cap bias, as mentioned previously, but we do have the ability to invest in small cap disruptors. It's high conviction, it's actively managed, and it's currently trading at a discount to NAV. Slide 3 is possibly the most important slide in the presentation. That's the team. And I hope you can appreciate that there's a huge amount of experience in the team. And hopefully that holds us in good stead when it comes to not just idea generation, but extracting the best out of management teams and key opinion leaders. And also helping to understand and manage risk, which is a very important part of what we do on a day-to-day basis. So just reflecting on 2024, we've got a slide here that looks at the performance, and the strategy delivered just over 5% outperformance versus the benchmark in the year under review. And so the NAV return was around 15%, and that was versus the benchmark, which was just under 10%. But also it's important to note, there's a table at the bottom of this slide that shows discrete annual performance over different financial periods. And really, despite the positive absolute performance, I think it is important to reflect on the fact that macroeconomic conditions did favour more cyclical sectors in 2024. So healthcare did struggle on a relative basis versus the broader market. So digging a little deeper into some of the performance drivers in 2024, we've looked at some of the subsectors here on slide 6. So in terms of the positive relative drivers, our overweight stance on biotechnology was one of them, with stock selection the primary driver. And really what we have here is an industry that appears to have a greater understanding of underlying biology, is innovating, and it's commercialising and launching new products. Underweight pharmaceuticals was also a positive driver of relative performance, and once again stock selection was key there. For balance, we also need to talk a little bit about some of the negative drivers, and we had an overweight in healthcare equipment. The subsector fundamentals were strong. Unfortunately, it was the stock selection that was subpar. We also had an overweight in healthcare supplies, and once again that was stock selection that was the driver of that underperformance. This is a subsector that's heavily dominated by more economically sensitive parts of the market, such as dental and ophthalmology, and that really was the drag on the performance. Turning to subsector positioning, I like to think this is reasonably consistent over the 12-month period under review. We're still constructive on biotechnology, on supplies, and also on healthcare technology. We have less of a conviction call on facilities. We think that some of the high levels of utilisation that we've experienced over the last 24 months may be starting to plateau. And we've also slightly increased our relative weighting for life sciences and tools. This is a subsector that has really struggled for the last 24 months, but hopefully with China potentially a key source of upside, we're starting to turn the corner. And as you can see here, we continue to have a relative underweight in pharmaceuticals. It's quite a mature sector, quite mature margins, and really there's quite a wide dispersion for the companies we think that are in a good position to maintain medium and long-term growth, and those who are less fortunate and appear to have more near-term challenges. So slide 8 is just simply a snapshot of where we are. As you can see, the pie chart in the top left-hand corner, we have quite a large mega cap exposure, and that really is companies with a market cap above $100 billion. That's about a third of the portfolio. The other observation I would share with you is the geographic one. So we've got about mid-40s% exposure to the US, and that compares to the benchmark that's in the mid-60s. It's not really a top-down decision, that's more very much stock picking and bottom-up, but I think that's an observation that's worth sharing. And then the bottom left-hand pie chart really just looks at the different subsectors and the weighting there, and were carrying very low levels of cash at the end of December 24. I mentioned earlier in the presentation that the healthcare sector is very much out of favour, and this slide here really speaks to that, and this looks at ETF flows. And we use them because we think they're quite a powerful contrary indicator. And as you can see here, right at the bottom of the pile over this period on a review, healthcare was very much at the bottom in terms of outflows. And so having experienced the largest amounts of outflows since October 23, we think the bar for the sector to start working here on an absolute and relative basis is quite low. And then finally, in this part of the presentation, this looks at relative performance, and you can see that it really has been a very, very tough time for healthcare. On the rolling 5-year percent average, we're very much near the bottom decile. And though as we think about forward, we think once again very much out of favour, despite the fact that the sector does have strong fundamentals. And at this point, I'll pass over to Gareth, who will talk you through the rest of the presentation.
Thanks, Jamie. So 2025 and beyond for healthcare. The two charts we have here on this slide highlight the performance of the healthcare sector over a really long time period, 35 years. The index we use to show it is the S&P 500 Healthcare Index. The top chart shows the absolute returns for the sector, which have obviously been very strong, returning between 11 to 12% in line with tech over the time period shown. The bottom chart shows the relative performance of healthcare, and you can see that's still positive, but we have periods where the sector really outperforms the broader market and periods where the sector underperforms. And really following on from what Jamie has highlighted, we've had really healthcare's moving sideways since about 2015 on a relative basis. Then over the last couple of years, healthcare's really derated. And you can see the move lower is similar to what happened in the early 90s and also during a difficult time for healthcare between 2009 and 2011. Both of these relative sell-offs led to really good buying opportunities. And we believe that's the case here with the levels that healthcare is sitting at today. You can also look at this on valuation, and we show long-term data again here, looking at the relative forward price to earnings ratio for the healthcare sector versus the market. This again is the S&P 500 Healthcare Index versus the S&P 500. Long-term average 1.06%. We're now sitting at sort of the lows that you typically see, or you have seen, going back to the start of the 90s. So we're looking at a 25% discount roughly versus the market, which again we think is compelling. Also, if you look at absolute valuations and on a broader global basis, the sector is trading at very attractive levels, again on an absolute basis. So both relative and absolute are compelling. Just to highlight, and we've shown this before, these are the key investment themes that we think are the most powerful in healthcare. So we basically looked at where the growth is, and that's what we're looking for, obviously, when investing in healthcare. And these are the key investment themes that we follow. These have stayed consistent in the time we've been running the investment trust. Just quick snapshot: healthcare delivery disruption, innovation as you'd expect coming from healthcare, consolidation, a long-term story as healthcare is so fragmented, emerging markets, outsourcing, and prevention. So we're very excited about the long-term growth offered from these different areas of healthcare, and we're trying obviously to find stocks that will benefit from these growth opportunities. So those themes are really the 5-10 year plus themes or drivers. Just to highlight some of the shorter midterm opportunities that we're focused on in healthcare. The first one is access and affordability. So we're really thinking about how patients in different healthcare systems can get greater access to medicines, medical devices, and how healthcare systems can be changed to make them more effective so that access and affordability is much better. One example where we have exposure to at the moment is to products called biosimilars, which are cheaper generics of branded biologic products. A lot of those are coming off patent over the next 10 years, and we think it's a very powerful opportunity for the biosimilar producers. So that's one example of that short-term theme. Emerging markets, obviously, I highlighted as a long-term driver. In the short to mid-term, also very powerful. The sheer number of people, obviously, in these regions of the world, healthcare access, healthcare utilization is a fraction of what healthcare is in developed markets. The amount spent on healthcare is a fraction versus developed markets. So we think there's a significant opportunity here for access to healthcare to grow. If you're a believer in incomes and wealth improving across the different populations in emerging markets, healthcare access will come along with that, and we're very optimistic long term on the drivers for there. We think that's a multi-decade story. And obviously, drilling in with even more focus is the opportunity in China. What will happen there in terms of government action, and will that help the healthcare sector as well as other parts of that market in 2025? Lastly, artificial intelligence, incredibly exciting area. We see it as hugely relevant to healthcare. Healthcare, as we all know, the provision of healthcare is hugely inefficient. There are vast opportunities to automate both the provision of healthcare but also the healthcare industry in all parts, including pharmaceutical companies, biotech companies, medical device companies. It can be valuable across the board in terms of automation and reducing complexity. And so we're very hopeful that that can be a powerful multi-year story for healthcare. So to finish, the outlook for 2025 in healthcare. We're very bullish here. We think the sector's massively out of favour. Valuations on both a relative and absolute basis are compelling. The earnings growth for 2025 will be significant for the sector, and fundamentals, despite what markets suggest, are robust, and with the key themes that we've highlighted the most important. PCGH is a global healthcare portfolio investing across all subsectors, looking to gain exposure to growth and the key growth themes, and investing in different market caps. The fund has a large cap bias, investing in quality companies, but also allows investment in small and mid-sized companies where we see strong growth opportunities. This is a high conviction, active strategy investing across the healthcare universe. So why Polar? The Polar Healthcare team has, most importantly, a significant amount of experience investing in healthcare across different cycles, and a great passion for investing in healthcare, which we think are the two most important characteristics to have when running funds in healthcare. The sector is diverse, complex, always changing, and again that supports an active strategy. And what we think is most exciting compared to other cycles that we've been through over previous decades is that we see lots of different new product cycles coming through for healthcare companies, and that will hopefully drive very strong returns for investors going forward. Thanks from Jamie and I for listening. Any questions for the managers or the board, please email cosec@polarcapital.co.uk with the subject line PCGH-AGM. Thank you.